What's up, you guys? Tesla is up again today, hit our target of $240, and we're going to go over when I plan to go short. I posted on Twitter my requirements. We're going to go through all of those. And if you're not following me on Twitter, you definitely should be following me because I throw all my Tesla trades out there, as well as a ton of other content. And check out our Discord, which is free. So let's go through and first look at what we were watching yesterday for Tesla. Somebody on Twitter had asked me, how do you draw a Fibonacci retracement? Because we were talking about that golden zone from last time. Basically, you're going to take the trend, and in this instance, we're going from this swing high up here at 266.54, because this is the swing high body of that most recent trend. So I'm not going to go from wick to wick. Some people like to do that, but I like to go from candle body. So in this instance, I will go from the top here down to the low of the body of this candle down at 196.27. And if we were to extend this all the way out, you're going to see the areas of interest that I'm usually looking at is going to be the 0.618, the 0.707, and the 0.768. These levels are called the golden zone or a golden pocket. And these areas are very high levels of interest that usually we find a rejection at. And so when I'm looking at how much Tesla has ran, I'm also thinking about the common individual who's saying, this has to reject soon, this has to pull back. And I know usually that what's going to happen is we'll have market makers drive this thing up through 240, continue to push it through 250, 255-ish, and where I plan to short is somewhere around 250 up to about $257. I don't want to prematurely short this. Even though things are looking pretty solid right now, I do believe that the market is in a very greedy spot, and I know what it's like trying to short a market that is on a dumb breakout for illogical reasons. You can see here that we also have two bearish order blocks sitting up between 257 and 268, and then from 268 up to 274. These are levels of selling by institutions that have acted as resistances before. We also have our volume profile level from 262 to $250. These thick areas of volume on the volume profile will always act as strong areas of resistance and strong areas of support. So if we zoom out, you're going to be able to see that this is the resistance level that I'm really wanting to short at. If I could only go in with one position at one time in order to short this, what I really would be looking for would be waiting for $260, entering at 260, shorting back down to 220, and then setting my stop loss somewhere up at $275. This would give me a 3-to-1 risk versus reward ratio, which I think is very solid. And the good thing is, if we set our stop loss up over 270, it gives us a little bit of wiggle room, because if we actually break over this level, this thing will skyrocket all the way up to $300. And just like that, we will go from being very bearish to very bullish. It's so funny because so many people are like, oh, dude, a couple days ago you were bearish. And it's like, yeah, you're totally right. But for me, especially when we're at specific levels that are of heavy importance, for instance, this 220 level, anything under 220, I'm a bear. Anything over 220 up to 250, 260, I'm a bull. And I am ready to switch on a dime once we move past these specific levels. And that's usually when I'm trading. I'm not usually looking to trade all of these consolidation areas. I'm looking for the pivots and the breaks through key levels, and then trading those instant and volatile moves like we've been doing very recently. So in short, I will be looking to go short on Tesla, probably starting at 250, but really heavily up at 260. I'll probably start with going, with maybe some March puts, probably with 1/3 of the amount of money I want to put in. So let's say I want to go with 10 grand. I'll start with 3,300. Then I'll add another 3,300 at 257. And then my final 3,300 at $260, which will give me a solid average somewhere around 255. There is still a chance that we could reject right here at like 247.80, because there's this a thick area of volume right here on the volume profile. But I do think it would be premature for us to actually reject at this level right now. Let's hop on over and take a look at Blackbox Stocks. So at the bottom left side of your screen, you're going to see my head, but I'll move this out of the way very briefly. And you're going to see the confirmed unusual options flow for the day. So when you see bullish flow or bearish confirmed flow that I post myself, either on Twitter or if you're part of the private Discord community, anything that's considered bearish or bullish is going to be confirmed, which means that it came in on the ask or above the ask or on the bid or below the bid. This is very important because we know for sure if it was, for instance, a bullish or bearish position. If somebody comes in and buys, it just says $500 million worth of puts, we don't know if they bought them, which is bearish, or if they sold those puts, which is bullish. But today we got 371 million confirmed bearish flow on Tesla, which is a lot for confirmed flow. For me, as I said before, this is not enough for me to start a position quite yet, but this is definitely something that we should be keeping our eye on. We went over in yesterday's video the phantom prints that we got on the S&P 500, and it does seem like SPY is probably going to want to continue to run. So as I've said before, let's just be a little bit patient. Let's be a little more patient here with Tesla. I'm probably not going to short for another week or so. And I think that overall, there's just no reason to, especially in the short term. Like if we're looking at Tesla on the 15-minute, we're not even under the 50 SMA. You can see, yes, there's some selling pressure coming in here between 248 and about 243, but we're not even under the 50 SMA. I wouldn't be looking to short on the short time frames until we're back at least under 240, but really I'd be playing 235. If 235 were to break, we'd get that drop probably of about 5.5% to fill the gap at 222 very, very quickly. And you can actually see here that our trading bot took a trade yesterday, swung overnight, closed out for a 4% return, and then re-entered again today here at 244.27 and is currently holding, hopefully looking for the break up through $248. If you guys want access to this trading bot, you can get access to all of them in the second link in the description. But so far, killing it. I think we're going to probably see Tesla continue to run up to 250, and that is, like I said, where I plan to go short. Now, last thing I want to talk about before we hop off is this tweet that I posted earlier, and a lot of you guys liked it because I think that it hits home for many people. But I said, I could have made so much more is the wrong mentality to have. You have to accept that you're never going to buy and sell at the perfect spots consistently. You must remove the need to be perfect when trading. Remove the talks about sniper, lotto returns, and think more about peace of mind, the ability to sleep at night, the ability to be stress-free and to live a stress-free life. I said I didn't quit the rat race just to stay a fat rat on my own. Those who truly make a living from this know that you cannot be profitable for decades and decades when you are overloaded with stress. And this is huge, guys. I think that, out there, especially as somebody who's, I guess, like a guru in the space, I absolutely hate that word, but I would say that I'm an influencer of some sorts. It's tough because we want to pretend like we know so much more than we really do. We want it to give the allure that we know exactly what's going to happen as soon as it's going to happen. But in reality, it's just a probabilities game. And you need to remove your need to be right and your need to be right more specifically about the next trade and your need to make money right now. Because long term, that type of stress that you're putting on yourself, dude, it's going to fucking kill you. No amount of money is worth sitting here on your phone. And listen, in the beginning, I understand you're like, dude, that sounds good for you. You probably live a good life. But I understand 4 or 5 years ago, I would have said, fuck you, dude, that makes no sense. But it really is true. Especially if you want to really build wealth in this lifetime. If you really want to build wealth, guys, the wealthiest people learn to leverage their time. Even if you could make $5,000 a day, and I've had people offer me $800 an hour to sit with them from open until close, and I have denied it. Because I know that there's no scalability there. There's no leverage there. There's no freedom or happiness there. I could do it for a little bit, but then when I'm not working, I'm not making money. And so I want you guys to really focus on living a stress-free life, to focus on being happy, to focus on, dude, I'd rather get 20, 30% return per year and be a little less stressed. That's a lie. Honestly, for me, I'm shooting for to at least double my money every year and as stress-free possible as I can. And so guys, I hope this video helped. Rather short today, but as always, if you guys want more or want to trade with me, want to get access to my live streams, all my trades, use the second link in the description, join the Discord community. Today alone, guys, we've absolutely been killing it. Closed out almost 30 grand this week on Tesla, ended up closing Netflix $4,000 profit, ended up closing Coinbase for a solid profit too that I didn't post on here. DraftKings $700 yesterday. So guys, go check it out. It is more than worth your time and your energy. I promise if I put my name to something, it's going to be worth it. Thanks for all the support. I'll see you next time. Peace.